The circular flow is an economic model that shows the flow of money through the economy. The most common form of this model shows the circular flow of income between the household sector and the business sector. However, in the real world, the economy is not merely composed of the household and business sector. We can therefore expand and develop our basic model to incorporate a number of injections or inflows to and withdrawals or outflows from the income flow by adding other sectors such as capital market, government, and the rest of the world. So we call this complex circular flow of model. To make it easier for us to understand, let us have first the household, businesses, and the consumption expenditure. We all know that businesses provide income into the household. How? It can be that a household have businesses itself that provide income, or it can be that the business gave salaries in exchange for the labor or services of the household. After having an income, the household now consume the money, and that's what we call consumption expenditure. It is the spending by household on goods and services. And we have three consumption categories: the durable goods, non-durable goods, and services. Durable goods are those goods that last for more than a year. Examples are furnitures, appliances, and any other things that last a year. Non-durable goods are goods that tend to last for less than a year. Common example are foods and groceries. While services are activities that provide direct satisfaction of wants and needs. Common example are entertainment and education, like cinema, massage parlor, salon, and anything that gives you satisfaction without production of tangible goods. Those goods that we consume are from businesses, from the malls, stores, and many other businesses that provides us goods and services to satisfy our wants and needs. Next, let us add the capital market to the flow. Observe that not all of the income received by the household is spent. Some is saved. Generally, the money saved by household is placed in the capital market. Capital market are venues where savings and investment are channeled between the supplier who have capital and those who are in need of capital. Example of these are banks, stock market, and other financial intermediaries like insurance. The money saved by the household will now become a source of funds for the business sector. Say for instance, the businesses realized that they have to upgrade some of their equipments and machinery and decided to borrow funds from the capital market. In other words, the money saved by the household can only return back to the circular flow when businesses utilize it to fund new and additional investment. Now let us add the government to the flow. Part of the income of the household is taxed by the government. Taxation is the imposition of compulsory levies on individual or entities by the government. Taxes are collected in almost every country of the world, primarily to raise revenue for government expenditure. Taxation can be direct or indirect. Direct tax is a tax that a person or organization pays directly to the entity that imposed it. This includes income tax, corporate tax, and wealth tax. While indirect tax is paid indirectly, common example of this is VAT or the value-added tax. The money will now be funded for government expenditure. Government expenditure refers to the funds and resources allocated by the government to social goods and services, such as healthcare, education, and infrastructure. So whatever amount of tax is paid by the household, this goes back to the income stream through government expenditure. Lastly, let us add the rest of the world to the circular flow. Household also spend some of their income on imported goods and services. So imports are the goods and services that are purchased from the rest of the world by a country's residents rather than buying domestically produced items. Say for instance, if we import cars from Japan, a portion of our income goes out of our economy since we have to pay these imported products out of our own income. On the other hand, some of our outputs is sold to overseas customers. Hence, exports are goods and services that are produced domestically but sold to customers residing in other countries. Upon research, I also found out that if imports are greater than exports, it will lead to trade deficit. In simple terms, a trade deficit means a country is buying more goods and services than it is selling. However, if the imports are lesser than exports, it will lead to trade surplus, a situation in which a country sells more to other countries than it buys from other countries. So it will basically just go back to the business again, and then household, and then so on. It's just like a never-ending flow. So this slide is about the withdrawals or outflows, which means money flows from the economy, and injections or inflows, which means money flows in the economy. So the government injects money into the circle or cycle through government spending or government expenditure. Money also flows into the cycle through exports, which brings in cash from foreign buyers. In addition, businesses that invest money to purchase capital stocks contribute to the flow of money into the economy. Just as money is injected into the economy, money is also withdrawn or leaked through various means as well. Taxes imposed by the government reduce the flow of income. Money paid to foreign companies for imports also constitutes a leakage. Savings by businesses that otherwise would have been put to use, or a decrease in the circular flow of an economy's income. Now we are down to the last slide. This is the factors from the complex circular flow of model. This is just kind of a summary to what I have discussed. The income, savings, expenditure, taxation, investment, government expenditure, imports, and exports. And this is our formula. S plus T plus M equals to I plus G plus X. So we can therefore conclude that in order for an economy to achieve equilibrium level of national income, whatever withdrawals in the income flow, the savings, taxes, and imports must be injected back to the economy through investment, government expenditure, and export. So that's it, guys. I really hope that you learned something from me. This is Darlene Katingan, and it's the end of my report. Thank you!